This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. As you know, today is supposed to be Wednesday, April 10th, 2024, but for those of you following along, you know that I spent most of the last 2 weeks or so on the road, and boy, has it been a heck of a week. All in all, I racked up a total of 3,044 miles, or 4,894 kilometers, driving all of it. And hitting cities like Pensacola, Florida, Mobile, Alabama, and there's a story for you there. New Orleans, Louisiana, where I did our last, albeit abbreviated, DCA Wednesday episode 2 weeks ago almost now. Houston, Texas, San Antonio, Texas, Austin, Texas, Dallas, Texas, where I'm just barely missing out on the BitBlock Boom Conference. I missed out on that conference by about 3 days. And Fort Worth and a small town called Ennis, Texas, where I actually stopped to watch the eclipse. That was really cool because Ennis is directly in the middle of the path of the eclipse. So you had the maximum totality, more than 4 minutes of the sun completely eclipsed. If you've never seen a total eclipse of the sun, the totality is just surreal. It is definitely moving. It's definitely a religious experience. It's very, very cool. If you haven't seen it, it's very hard to describe. If you have seen it, you know what I'm talking about. Of course, I drove many of those miles in that epic storm that swept the southwestern United States. You probably heard about the tornadoes in Louisiana and Mississippi and Alabama. I was in one of those tornadoes, kind of. I wasn't directly hit by the tornado. I hunkered down in a hotel. While I was driving to the hotel as the tornado warning was kicking out, I had a I had a branch come crashing down out of a tree and smacked my car's windshield. Fortunately, it didn't break the windshield, and probably the reason it didn't is I discovered after the tornado that the entire tree was still attached to that branch. It took the power lines down and this big tree just blocking the entire road, right where I had just barely squeaked over. Anyway, I won't bore you with a rehash of the now outdated news because so much has happened since our last DCA Wednesday episode, but we do have a lot to discuss nonetheless, not the least of which is the price. Currently, the US dollar value of Bitcoin has dropped more than 7% this afternoon, allegedly in response to the looming war in the Middle East, or the escalation of war in the Middle East. This comes on the heels of the markets reeling in response to the hotter than expected inflation report, with some now actually predicting the Fed will increase rates instead of cutting them this summer, and most people in general assuming that whatever cuts to the interest rates the Fed announces will come later and less frequently than the markets had been betting on. Before we get into all that, though, let's briefly check out the current vital statistics. Obviously, I made our DCA Wednesday stack on Wednesday when things looked a little different, so I'll go over those numbers when it is time. However, at the time of this recording, we are sitting at a block height of 839,094, and that puts us just 906 blocks away from the looming halving. The minor reward halving now estimated to occur on April 19th. So 6 days away, 7 days away, depending on where you are while you're listening to this podcast. Either way, it's getting sooner and sooner. This is possibly the last DCA Wednesday stack we'll be able to make before the halving. Of course, don't expect the price to explode on halving day. All of the previous halvings, actually, we saw a little bit of a price pullback after the halving, and a lot of people touting, a lot of the naysayers, the no-coiners saying, see, I told you the halving was no big deal. Obviously, if you're a Bitcoiner, if you've been listening to this podcast, you know that I've been saying over and over again that Bitcoin usually doesn't eclipse its previous all-time high until 6 months to a year after the halving. If history were to repeat, that means we wouldn't have set a new all-time high until sometime around Thanksgiving or Christmas this fall, this winter. Of course, history was different this time because probably because of all the ETF hype and the ETF purchasing, we set that new all-time high early, even before the halving. Technically, that doesn't count as a cycle all-time high because we still haven't finished the halving cycle that we're in, but we're getting close. As they say, TikTok next block, the halving is coming up at you like a big dog with a wet nose. Speaking of Bitcoin price, the price has rebounded a little bit from where it sank earlier this afternoon. At one point in time, Bitcoin was down to as low as $60,908, a drop of more than 8%. Currently, the price is only down about 3.5% or 4%, depending where you get your information, bringing in at about $64,430. Hey, just because you're DCAing alongside of us, one of the neat things about DCA is you can still BTFD. So if you did your stack on Wednesday and you're waiting till next Wednesday to do your next stack, hopefully you took advantage of that $60,000 Bitcoin or the $64,420 Bitcoin where the price is currently located at. Bitcoin's current price gives it a market capitalization of $1.27 trillion. So just under that benchmark of the market capitalization of silver that we've spoken about quite a bit. And Bitcoin's on-chain activity appears to be zooming along. Currently, there are 5.99 transactions per second average on the Bitcoin blockchain right now. That's down quite a bit from where we were on Wednesday when I did my DCA Wednesday stack, but still significantly higher than we've seen in a while along those lines. If you need to make an on-chain transaction, according to mempool.space, a high priority transaction should include a fee of 36 sats per VByte, which works out to about $3.24. Clark Moody's fee estimator is recommending, if you want to guarantee that your on-chain transaction is mined in the very next block, that you include a fee of 135 sats per VByte. Obviously, that seems a little high. Looking at mempool.space, I'm showing that in the very last block, which was mined in the last 3 minutes while I've been talking, there were fees ranging anywhere from 38 to 10,172 sats per VByte. So that 36 sats per VByte might be a little optimistic for the next block, but definitely something closer to 38 sats per VByte instead of that 135 sats per VByte that Clark Moody's dashboard is recommending. Looks more realistic. So if you do have an on-chain transaction you need to make right now that you need to that you can't afford to wait a little while on, because even Clark Moody's dashboard is saying that a fee of just 8 sats per VByte will be mined in a day. But if you want to lowball your fee, don't forget to use a wallet that lets you use replace by fee or child pays for parent, so that if fees spike again and that 36 or 38 cent sat per VByte fee doesn't ever get mined or doesn't get mined fast enough for your liking, that you can change that fee, that you can bump that fee. All right. Last Wednesday, just a couple of days ago now, the statistics looked a little different. When I did my DCA Wednesday stack, we were only at block 838,692, which put us more than 1,000 blocks away from the halving, 1,308 blocks away from the halving. At the time I did my DCA Wednesday stack, we purchased at a price of $70,918. So more than $6,000 more than what the price of Bitcoin is currently ringing in at. That bought us 27,567 Satoshis, which increased our total stack to 9,182,608 sats and increased our average cost basis to $30,928.03. Still less than half of what the current US dollar value of Bitcoin is, but $125 more than last week. And while I was in New Orleans, that DCA Wednesday stack increased our average cost basis by $119. So we're talking, more than $140, more than $240 increase in our average cost basis. But still, an average cost basis of $30,928.03 is not too shabby, considering that we were talking $70,000 Bitcoin before this morning. And it looks like that price is starting to rebound. Again, people tend to panic when there's news that looks like, when there's bad economic news, when in reality, bad economic news is good for Bitcoin. Not necessarily war, not necessarily in the short term. If the Fed ends up raising rates and the economy collapses, maybe it's bad for the price of Bitcoin in the short term. But in general, Satoshi created Bitcoin in response to the 2008 financial crisis. And, when fiat currencies fail, that's not necessarily good for people. It's not good for normies, but ultimately it's good for Bitcoin, right? Real quick, I'll look at the news, not the least of which is what's going on in the Middle East right now. What looks like Iran is sending some drones and some missiles towards Israel, and that's what has everyone spooked right now. Of course, on the weekend, Wall Street's closed. All the major traders are on the weekend playing golf, doing whatever they want to do, and so there tends to be less volume and the ability for the price to be more volatile, for there to be more manipulation. It's easier to manipulate the price when there's less trading going on, when there are less orders or sell or purchase orders on the books. But even while I've been talking, the price of Bitcoin has recovered substantially. It's still $64,827, but that's up 5% from where we were at that low of $60,908. Back to that news I wanted to talk about. Obviously, the price drop was what most people are talking about because, as they say, the price is the news and the news is the price. Before the panic about war in the Middle East and an expanding war in the Middle East took over the headlines, the previous bad financial news was that inflation, of course, came in higher than anticipated once again. I am not a boomer, but I'm old enough that I lived through the 1970s, and while I was a child in the 1970s, I remember waiting in line for gas in my parents' car, and I remember Jimmy Carter's fireside chats, and I remember the misery index, and a lot of things in the United States feel really, really similar to what was going on in the 1970s. Of course, we had war in the Middle East, we had high inflation, we had environmental concerns leading to fuel efficiency restrictions at the time. It was the end of the muscle car and the beginning of the K car, which was a crappy car that did absolutely horrible, that got really lousy gas mileage. All the little four bangers, the four cylinders that, had maybe 90 horsepower, but got, better gas mileage than the Chevy Impalas and things that people had been driving. So the economy cars, instead of now we have, the push for EVs or alternative fuel vehicles, but basically the feeling is the same. The electric vehicle technology really wasn't feasible in the 1970s. So what they were pushing were the small cars that got much, much better gas mileage. Better fuel efficiency standards were what were the thing back then. But, a parallel to what's going on today, we had a president who was a leftist, although I don't know if you could call our current president a leftist. I don't think he actually has any principles that he believes in. I think he's just in this for himself. A lot of politicians, you could say that about, regardless of what side of the aisle they align themselves with. It seems to me that we have somebody in the office right now that is more interested in feathering his own nest, and he's going to throw the left a bone every once in a while because he needs to rely on them to get reelected. Whereas Jimmy Carter, he was a very inept president. Oftentimes people consider him the worst president the United States has ever had, but he was a genuinely nice guy, something I don't think I could say for the current president. Either way, I'm getting serious 1970s vibes, with the minor exception that, Jimmy Carter was just a nice farmer who was out of his league, whereas Joe Biden tends to be, I think, a lot more corrupt, a lot more of an authoritarian, a lot more out for his own gain. But either way, certainly is inept because he's making a lot of the same mistakes that Jimmy Carter made. So history repeats, right? And history repeats not only with financial cycles, but with presidencies, apparently. Inflation wasn't the only bad news we got last week. Fox Business was reporting just yesterday or the day before that credit card delinquency rates have hit the worst level since 2012 in new Fed data. And that's actually the worst delinquency level ever recorded because apparently the Fed didn't keep track of this data until 2012. The article goes on to say, all stages of credit card delinquency, 30, 60, and 90 days past due, rose during the fourth quarter of 2023 to the highest level since 2012 when the Fed began tracking data. The article continues, stress among cardholders was further underscored in payment behavior. The report said the share of accounts making minimum payments jumped 34 basis points from the third quarter. Of course, the financial news is pretty bleak whenever you look at it. Daily Mail, for example, is reporting the true scale of U.S. retail bloodbath, revealed how 5,500 shops have closed in just 1 year, and even big names like Walmart, Bed Bath & Beyond, and Nike have suffered. The article says U.S. retailers shut a total of almost 5,500 stores in 2023, with major brands like Bed Bath & Beyond, Walgreens, and Rite Aid leading the pack. The closures affected a whole range of sectors, from clothing stores to discount stores and drugstores, as American commerce increasingly takes to the internet. But the home and office sector was hit the hardest, accounting for more than 30% of all closures, more than twice the amount in 2022. So the mood out there in Wall Street, the financial mood out there is bleak. And as I said, this reminds me an awful lot of the 1970s. If that's the case, inflation is going to be sticky. During the 70s, we had periods where inflation shot up, and then where it appeared to be cooling. It appeared that inflation was, getting under control, only to shoot back up again. Of course, that lasted almost 10 years. I would not be surprised to see the exact same thing play out this time around. Who knows? Like many things, I don't have a crystal ball. I can't forecast what's going to happen on Wall Street any more than what I can forecast what's going to happen with Bitcoin. However, remember, you're a Bitcoiner because you don't believe in the current financial system. You're a Bitcoiner because you believe in hard money. You're a Bitcoiner because you believe in Austrian economics. Hopefully, you're not just a Bitcoiner because you believe in number go up technology, but the strength of Bitcoin when traditional financial markets, when fiat currencies are failing, is largely responsible for number go up, because as more people realize that Bitcoin is an exit ramp, Bitcoin is a hedge against inflation, Bitcoin is a store of value, more people want to purchase Bitcoin, convert their fiat to Bitcoin, and the laws of supply and demand says that if you have a fixed supply, and that's part of the genius of Bitcoin, is there will never be more than 21 million shares, that more people demanding the same supply of a product leads to higher prices. And speaking of more demand, obviously we've seen a lot of the GBT ETF being sold off, and on many days that's led to basically almost zero out the purchases that the other ETFs have seen, the inflows. We've seen positive net inflows more often than negative net inflows, but not as much as you would have expected to see had GBTC not had several $1 billion flow out of their fund. Nonetheless, even on the slower days, we've seen factors of 10 or 100 times the supply of newly mined Bitcoin being soaked up by the ETFs. And this has led to a headline in DL News, and I actually have never heard of DL News before, but their headline's making the rounds, that this miner says Wall Street banks want to buy its Bitcoin. It's a sign supply shortages are coming. The article says, launched on January 11th, Bitcoin spot ETFs have seen over 12 billion in inflows. In other words, more than 211,000 Bitcoin have been vacuumed up by ETF issuers and converted into shares. This sudden demand created a shortage of Bitcoin on centralized exchanges, forcing banking institutions to contact at least one Bitcoin mining company to try to acquire the miners' Bitcoin holdings. Quote, we've had banks reach out to us to try and buy our Bitcoin because the supply shortages on these different exchanges, Ashner Ganut, CEO of Hut 8, told DL News. The article continues, Hut 8 is one of the largest publicly traded Bitcoin mining operations in the world. Its market capitalization stands at almost $1.2 billion. Ganut goes on to say the mining company was contacted because of its enormous Bitcoin holdings. So there have not been 211,000 Bitcoin mined since the Bitcoin ETFs were approved and started hoovering up all that Bitcoin. And, as I've often said on this podcast, the majority of Bitcoin for sale on exchanges comes from the miners, because they have to sell some of their Bitcoin to pay for their expenses, whether it's the electricity it costs to mine the Bitcoin, to pay for their employees, to pay for their rent, what have you, or even just to take profit. That being said, many of these mining companies have been hoarding as much Bitcoin as they can because they're not stupid. They know the price is going to go up. And so they've got mining large amounts of Bitcoin on these mining companies' treasuries. And apparently, ETF issuers are going directly to the miners and asking them to sell them Bitcoin. And this actually is interesting for two reasons. A, because it shows you just the amount of, the impact, the amount of demand that these ETFs have, the impact of outstripping the supply of newly issued Bitcoin, the fact that hodlers like us are not selling, that we're never going to sell our Bitcoin to BlackRock or to Grayscale or to any of the ETFs, hopefully, at any price. At least I don't plan on selling at any price. But also, if they are going, off exchanges, over the counter, so to speak, buying Bitcoin directly from miners in this case, that doesn't affect the order books. And that's perhaps one of the reasons why we haven't seen the price of Bitcoin shoot up as much as some have predicted as a result of the Bitcoin ETFs. For example, you remember Max Kaiser was predicting 75,000 Bitcoin the Monday after the ETFs were launched. We had other people predicting $100,000 Bitcoin and even $1 million Bitcoin within the month or so after the ETFs were launched. And obviously that hasn't happened. But long and the short of it is, even with interest in the ETFs waning a little bit, the inflows were still positive on Friday, but not nearly as positive as they had been. And that's even with Grayscale tapering off. It appears that a large portion of the Genesis Bitcoin that was being liquidated in their bankruptcy proceeding has been sold. And so some of the sell pressure should have gone away. There was a day where, I think it was Thursday, where there was less than 100 million Bitcoin sold by GBTC, which is a significant reduction in what they had been seeing in terms of outflows. And while the other ETFs were counterbalancing that, still the negative inflow was only like $75 million. The net positive inflow is only like $75 million that day, maybe 100 million or so on Friday. I don't have that data directly in front of me because I am still unpacking from this trip. I'm not in my studio right now. I am recording on a better microphone than just my phone or my laptop. Last Wednesday, I was recording in New Orleans on my phone. Hopefully that sounded halfway decent. So I don't have my really nice microphone with me, but hopefully this is good enough, or at least better than when I record on my iPhone. But I don't have a lot of my notes with me either. And so some of this I'm shooting from the hip. I'm going purely by memory. So if I'm off by a couple dollars here or there, forgive me. You get the point, though. I'm talking kind of in generalities. It isn't all just doom and gloom, despite the fact that the price is dipping, and a lot of us consider that good news. I BTFD'd. As I said, just because you're doing DCA doesn't mean you can't take advantage of these tremendous sales. I made a purchase today. Of course, I do not count that in our DCA Wednesday stack because for the purposes of this podcast, we're evaluating the concept of dollar cost averaging. And so, even though I do add to my stack from time to time, especially when there's a big dip like today, that's not reflected in that total stack of Satoshis. And therefore, it will not spoil the data as to whether or not DCA was a good deal or not, a good idea or not. In positive news, 2 days ago, CoinDesk announced that Craig Wright has reportedly dropped his appeal against Hodlnaut in Norway 1 month after his humiliating victory in the UK, where a UK court ruled that he was not the inventor of Bitcoin, he was not the author of the white paper, and that he was a serial forger, basically. Hodlnaut himself had tweeted, "Just got off the phone with my Norwegian lawyer. Craig Wright dropped the appeal in Norway. My win from 2022 is now final and enforceable. This case started May 19th, 2019 and lasted until today. I'm very happy. Now I just need to get the UK case dismissed /1 and I can finally move on. Let's go." So congratulations to Hodlnaut. This is a big deal. It seems like a no-brainer. Obviously, with the humiliating defeat that CSW just had, it also seems like a no-brainer that he would seek to get the UK case dismissed, because obviously that UK case will be influenced by the other UK case, which was a pretty resounding defeat. But I mean, you never know what somebody who I firmly believe is mentally ill will do in their delusion. And even though this might seem like a no-brainer, and you should have been confident that Hodlnaut was going to win all along, never underestimate the amount of stress that poor Hodlnaut had to go through, because, just the other day we got the news in the United States that O.J. Simpson had died of cancer. And of course, if you remember, in the 90s, O.J. Simpson allegedly butchered his ex-wife and then butchered a bartender who just happened to stumble across the crime scene to return, I think it was a pair of sunglasses or something that his ex-wife had left at a restaurant. And in what was described as the trial of the century, he was ruled not guilty. Knowing what I know about evidence, forensic evidence, etc., I've actually seen the crime scene photos. Without doxing myself too much, let's just say I was involved in a line of work that, while not directly involved with the O.J. Simpson case, gave me access to that information. I know the detectives, I know the crime scene analysts that were there. And so I know a little bit about that case. And when he was found not guilty, that's the first time I started thinking that the justice system in the United States wasn't really that just. That if you had enough money, or if you were famous enough, or if the case was political enough that whatever happens, the outcome of that case wasn't necessarily based on justice, based on the facts, based on reality. Because it was a travesty in my mind that O.J. Simpson got off. And hopefully O.J.'s roasting in the deepest pits of hell right now, because he's certainly facing final judgment that is not the judgment of man. If you believe in any form of religion, he's probably not being treated too happily where he's at. And if you're an atheist, then we're finally rid of him. But my point being that looked like it was a slam dunk case. I mean, there was DNA evidence. There were all kinds of things linking him to that crime scene, and nonetheless he was found not guilty. So the case against CSW, the evidence that he was a fraud, his changing stories, all the documents he was forging, just because Hodl or Not should have had a slam dunk win, doesn't mean that the courts are always going to rule the way you would think they would. So. And just because the Bitcoin community rallied behind Hodl or Not and came to his defense, helped funding his defense, helping pay for some of those expenses so it didn't bankrupt him, it didn't leave him and his family completely destitute, it doesn't mean the stress isn't there. You're going to worry about the what ifs until they no longer are what if. And so technically he still has to worry about his UK case, but it's certainly looking a lot better with his Norwegian case having been dismissed. Correction, having won his case in Norway, and then Craig CSW dropping his appeal, and with just the slam dunk win that Copa got over CSW in the Copa versus CSW case. More good news, and this, I guess, depends on how you look at it. It's almost non-news because, Cointelegraph is reporting Bitcoin dominance hits 3-year high as BTC price dip pressures altcoins. The article goes on to cite the drop in price. Bitcoin price action suffered into the weekend with a liquidation cascade bringing BTC USD below 65,300. At the same time, however, altcoins faced much worse conditions. Data shows many of the top 20 cryptocurrencies by market cap fell by more than 15%. So really, you shouldn't care what these S-coins, what these altcoins are doing, because obviously they're all trending to zero in Bitcoin terms, one way or another. For example, Bitcoin has already set a new all-time high even before we get to the halving, and you may notice that the number 2 coin, which I'm not going to mention by name because this is not an altcoin podcast, has still yet to eclipse its previous all-time high. And while it probably will, it will do so when Bitcoin is substantially even higher, most likely. So altcoins have suffered even more than Bitcoin, and that's usually how it is. When there's a flight to quality, a race to security, a race away from risk assets. Even though Bitcoin is still viewed by most investors as a risk asset, altcoins are viewed so as even more so. Forbes has an interesting article posted just a couple hours ago, quoting legendary Bitcoin investor Tim Draper, saying it's going to zero. Not Bitcoin, mind you, the US dollar. The headline is, "It's going to zero. Legendary billionaire predicts a rapid cataclysmic US dollar collapse and a $5 trillion post-halving Bitcoin price boom." Basically, he goes on to warn that gradually but suddenly the US dollar will collapse, and that he believes it'll start doing so by 2030. I think he basically says over a 5-year period. The article goes on to say, if you're an investor in the stock market, they say don't bet against the Fed, Draper said. If you're a Bitcoin buyer, don't bet against the halving. It changes everything. The supply shrinks, the demand increases, and the price goes up. That's natural economics, supply and demand, Draper said, adding, we could see $250,000 by the end of the year, something that would give Bitcoin a market capitalization of $5 trillion. And he also goes on to talk about the lack of confidence in the US dollar eventually leading to a collapse in US dollar as well. Of course, the most important news is that despite all that is going on in the world, Bitcoin keeps adding a new block every 10 minutes, marching ever closer to the next halving epoch. And that's looking like that's going to happen 6 days from now on April 19th. And speaking of which, do you know what you're doing on the halving? The big halving party in El Salvador has already happened. That may have been a little premature. Of course, I think they knew they were doing so prematurely anyway. There's some pretty cool halving parties I've heard about in other places around the world. Sounds like there's going to be a heck of a big party in Poland, amongst other parties that we've already spoken about. Of course, you don't have to go to a major event with thousands of other Bitcoiners. Anytime 2 or more Bitcoiners get together, you can have your own party, your own halving party. And that's exciting. I still don't know what I'm going to do for the halving party. Most likely, I'll just celebrate with 1 or 2 close friends, some of which aren't even Bitcoiners. I've been trying really, really hard to orange pill a friend of mine who's 99.9% of the way there. He listens to all kinds of Bitcoin podcasts. He knows he should have bought Bitcoin 10 years ago. He's like me. He likes it because it's freedom money, because it's FU money, not necessarily because of the number go up technology. And I think he's there. Hopefully this dip this afternoon is the catalyst that it took. And maybe as I speak, he's already no longer a no-coiner. Real quick before I carry on, I want to thank those of you listening on your favorite podcasting 2.0 apps, such as Fountain. Fountain will allow you to not only earn sats for listening to your favorite podcasts, it also allows you to help support your favorite podcasts through the value for value model, where you could either stream sats on a per minute basis. You know, for example, if you think it's worth 1 sat per minute to listen to this podcast, or 10 sats per minute to listen to this podcast, or 500 sats per minute, you can set that and stream as you listen. Or, and this is actually my favorite, you can boost the podcast, which is like a shout out, but it's a Lightning transaction. So in addition to getting to say hi, give us a shout out, you can actually send sats. And I spoke about this boost on the last DCA Wednesday episode, but while I was walking along the banks of the Mississippi in New Orleans, I did not have it handy. So I'm going to read it verbatim this episode. That boost was for episode 155, and it was from longtime supporter of the podcast, Leggy. Leggy sent 3,000 sats and said, regarding 420, since 4.1 here in Germany, a new law is active that allows growing and owning for adults. I don't drink, smoke, or consume, but I will start to grow now. Why? Because I'm allowed to, and I want a big plant on my balcony to give the neighbors something to talk about, with a smiley face. And that is a sentiment I can relate to, Leggy. I thank you for the shout out. I thank you for the information, because it was 2 episodes now where we talked about 420, because it was looking like the halving was going to happen on 420. And I spoke about 420 in the United States refers to marijuana and marijuana laws, according to a lot of people anyway. I went fairly in depth on that 2 episodes ago. So if you haven't listened to that episode, it was episode 155. Go back and listen to it. And thank you, Leggy, because now we know a little bit about 420 in Germany. Speaking of our listeners, our geographic distribution of listeners is ossified a little bit once again. More than half of you are listening from right here in the United States. So thank you to those of you listening in the United States. Our top 10 countries continue as follows. Number 2 is Argentina. So muchas gracias. Hola, muchas gracias, amigos in Argentina. Number 3 remains Germany. So guten Tag. Dankeschön, mein Freund in Deutschland. Number 4 remains Luxembourg. Again, guten Tag, or Morien, for those of you who speak Luxembourgish. Speaking of Leggy, Leggy's the one that told us how to say greetings in Luxembourgish. Number 5 remains Canada. So hello to our friends up north, where hopefully the weather is warming up a little bit. Number 5 remains Spain. So hola, muchas gracias, amigos in Spain. Number 7 remains Colombia. Again, hola, muchas gracias, amigos in Colombia. Number 8 remains Sweden. So hey, thank you to those of you listening in Sweden. Number 9 remains the United Kingdom. So hello to those of you across the pond, but not across the channel, listening in jolly old England. And number 10 remains Venezuela. Once again, hola, muchas gracias, amigos in Venezuela. I have covered just about everything I wanted to cover. I think I even covered we covered the vital statistics both currently and last week. Obviously, the price of Bitcoin was significantly more expensive last week than it currently is. But it is really cool that DCAing, we've managed to rack up a stack of pushing 10 million sats, 9,182,608 sats, and doing so at an average price of just under $31,000 now. Correction, just under, $31,000 now. Unfortunately, if the price of Bitcoin holds or increases, that means that next week's DCA purchase will push us into the $31,000 realm. but that is still a heck of a lot cheaper than what the current price of Bitcoin is. Getting ready to wrap up this episode, Bitcoin is ringing in at $64,844.91. And we're currently at a block height of 839,100, putting us within 900 blocks of that halving. So hopefully you have something fun that you're going to do on the halving. If not, if this is your first halving, you really want to find a halving party somewhere, because this really is, the Bitcoin halving really is like New Year's, Chinese New Year's, Christmas for Bitcoiners all wrapped into one. It's a really good time. Last halving, the world was affected by the thing, so most of those halving parties were online, and I think a lot of these halving parties we have to make up. We have to basically do 2 halving parties in one, making up for lost time. Before I go, I want to ask you to help support the podcast. Obviously, you can do so through Podcasting 2.0 by streaming sats or sending us a boost. But you can also do so 100% for free by feeding that algorithm monster. The first way you can do that is make sure you're following the podcast on Twitter. On Twitter, we are at BTC Bulletin Pod, at BTC Bulletin Pod. If you are following us on Twitter, you'll know that this episode was going to be late and why this episode was late. And I keep you posted on when the newest episode is posted, and musings or pieces of news that I find interesting in between now and then. However, if you don't use Twitter, we are on Nostr as well, and our Nostr NPub is in the show notes. If you scroll down from wherever you're listening to this podcast in your favorite podcasting app, there are also some support links, some referral links in those show notes. For example, you know that I purchased our Bitcoin for the podcast using Cash App. Cash App is not a sponsor of the show, but there is a referral code in the show notes if you're not using Cash App and you want to use Cash App. Currently, they'll pay you $5 just for signing up. There's likewise a referral code for Strike and one for the Fold card. And there's several other ways you can support the podcast. But mainly, I'd like to ask you to help support that algorithm monster. Again, follow us on at BTC Bulletin Pod at Twitter. And if you could leave a 5-star review for this podcast, make sure if you're listening on Apple Podcasts that you still have automatic downloads enabled, because that really messed with our stats and a lot of people's stats when they disabled automatic downloads for podcasts where you didn't listen to more than 2 episodes per week of a specific podcast. Since we only do 1 episode a week, usually that made it impossible for us to meet that metric. And I know several other podcasters are in the same boat, and they saw their podcast listens drop by like 50% when that happened. And not just because people weren't really listening, that they were getting stats from the automatic downloads. No, because when you scroll through your podcast feed, it shows what you have queued up in your queue. And if we're no longer queued up in your queue, you can just scroll right on by and not even realize that there's a podcast for you to listen to. So depending on where you are listening, there are different ways you can like or rate or review this podcast. But regardless of what app or what format you're listening to this podcast on, if you can leave a 5-star review, or if you can like or subscribe or set up automatic downloads, all of that will feed the algorithm monster, which will help this podcast be featured for other people, which will help us orange pill more people. But also, perhaps as importantly, we won't disappear from your feed. So you won't go a week or two and have not heard from me in a couple of weeks and wondered why you haven't seen a Bitcoin Bulletin podcast. Because we're here. Granted, we're here a little late this week, but obviously if you were following us on Twitter, you would have known why. Okay, so this is not as short and sweet of an episode as the one I did walking along the banks of the Mississippi River last weekend, but I am going to wrap it up now because I have a pork loin and some baby back ribs in the smoker that I need to tend to since I'm the only person home. And the news is just in flux. And quite frankly, not that many podcasts. There's not that much podcast activity on the weekend. So maybe I'll do another makeup episode to make up for this one being late. I don't intend on being on the road anytime soon in the near future. So again, help support the podcast by listening on your favorite podcasting app, preferably on your favorite Podcasting 2.0 app. Like, subscribe, rate the podcast. Follow us on Twitter at BTC Bulletin Pod. Most importantly, though, I just like to hear from you. Even if you're not feeding the algorithm monster and you can't afford to send a boost, send me a DM. Let me know what you think about the podcast. If you don't use Twitter or Nostr, you can always send me an email. My email for the podcast is bitcoinbulletin@protonmail.com. But either way, don't forget to join us next Wednesday and every Wednesday while we grow that stack of Satoshis together. Until that time, though, keep on stacking those sats, you sexy sat stackers.